presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I'm going to tell you, I've been listening to you since your radio days back in 99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ward. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shue filling in for Tom O'Brien. This is the Tom O'Brien Show. We are back into operational, more or less. We'll discuss a little bit of what happened last week. And first, let's go through everything. We're making all-time highs. This market is inordinately, it's strong. It's super strong. Composite up about 0.95%. The Dow Jones Industrial up about 0.52%. That dollar, even, again, you're having this kind of divergence a little bit, right? Where the dollar's going higher, usually you're going to see the indices pump a little bit lower. Not the case in any capacity. Certainly, I would say that this is probably coming from some faltering in the Eurozone. There's some potential for Germany to go into a recession. They're essentially the most dominant economy in the Eurozone. Obviously, China's having some woes. We'll talk a little bit about what they're trying to do to help that. But the dollar, I mean, this is a massive counter-trend bounce off the 100 level. Up, trading at 103.25, about 0.33% right now. Crude oil coming down quite a bit, again, on some fears of Chinese deflation continuing. And then, of course, the tensions in the Middle East are still impacting the kind of price, but you're seeing some movement down. We're not as low as we were on that 65.27, kind of hovering in that mid, between 70 to 75. Again, you're getting some depression on it. Because of fears from China. You have the E-mini up about 0.84%. Trading at 5,909. I believe the SPY, if I can get to it, it's about 584 currently, which is pretty insane to see. And it's being driven by tech in a major way, right? And we can discuss that a little bit further. Russell futures up about 0.64%. Gold, the metals off pretty heavily today. You have gold contract off about 0.36%. Copper trading down 2.03%. And then you have silver off about 1.15% as well. Let's see what else we have going on here. Apple up about 1.7. What is Tesla doing today? Up about 0.53, but it lost quite a bit. Let's take a look at that real quick because they had their robo-taxi unveiling. They had Optimus. Look at this. This is a big sell-off too. Nice gap down to that 220 on some pretty significant volume as well. Getting some buying today, but that's probably just because people want to get in Tesla and they see this as a reason. I think I watched a lot of that, the clips from the robo-taxi event and showcasing Optimus and all of this. I think it was not good, to be honest. I think, one, a lot of people are very hyped with AI, okay? And they're kind of explaining they can use the AI with the Optimus. The Optimus is a whole new deal they're going to have to kind of hype people on. I think they're saying something around $30,000 for one of these units when they get it at scale. Still pretty prohibitive for a lot of people. And it was supposed to, showcase their engineering capabilities for humanoid-like robots and then also AI interaction. But I think, and some analysts also saw this from large banks, but, Optimus, that was not AI. Those were no doubt people. You should listen to that. I think it was a robot walking around, but the discussion and everything you're hearing, response was totally people, which is a bizarre thing to do. Why even show it, right? Because you run such a massive risk of people being like, "Hey, this isn't what you're saying it is." And then, of course, the cyber cab, it didn't really demonstrate anything in a major way, especially when you're in a realm with Waymo, which is already operating on the streets. Okay. You had Uber and Lyft blow up after that. This was, in my opinion, a pretty big fail from Tesla. And I don't know how you come back from it in a major way. They are going to come back from it, obviously, because they produce so much. They have all these kind of deals with the charging. Of course, their data is massive. But it seems like they're getting out-competed with Waymo right now in this realm, which is kind of what people were banking on. I mean, if Waymo is successful, you see in China, they use these autonomous taxis, at least for, food delivery and all that kind of stuff. But this is a huge stumbling block for Tesla. I think it was a major failure. So we'll see what happens. The market responded similarly, within that kind of sentiment as well, trading at 218.88. And so we'll see what they do in order to kind of bounce back from that. Let's take a look. First, I want to, talk a little bit. Of course, we got hit by a hurricane a little bit south of us. It was at a Cat 5 for quite a while. It came down to a Cat 4, and it hit us at a Cat 3. I live downtown, and the destruction was immense. I mean, this is. I'm gonna show you some pictures from it. This is Tropicana Field, totally destroyed. We just got power back at the office sometime, between 9 p.m. last night and earlier this morning. We had something roughly like 70% of the county was without power for a few days. You had it in Lee County, where it was, kind of north of 90%, which was insane. This is the damage here. Obviously, a lot of trees coming down. Let's see if I can find this one. This is pretty nuts video here. So I live, it's not pulling up. Oh, I see. So I live right by this building here. And I was out there with some people who live in my building, and this massive we heard this massive crash, and they're like, was that a transformer? I'm like, no, I'm pretty certain that was a crane. And sure enough, it was a crane. They didn't have enough time, I suppose, to get this crane down. I think is a, big issue. It wasn't, bound to the building in any capacity. Luckily, this wasn't residential. This was office space. But I mean, just look at that damage. I mean, it's pretty crazy. Trees down everywhere, live wires down everywhere. You had people further exacerbating the situation by cutting fiber optic cables that were operational. So yeah, quite the significant storm, and it makes you kind of think, if we did get hit by a Cat 5, how badly that would be. So thanks for your patience last week. I know we weren't really on doing anything, and some of the newsletters weren't getting out in some major ways, so we appreciate that. They were saying, this is from Bloomberg, they're saying from both Helene and Milton, we got a major storm surge from Helene that destroyed our entire coastline. So, if you're thinking of visiting Florida for the beaches, I would wait some time for that. But they were saying it's expected to cost insurers $35 to $55 billion. That's according to Moody's RMS risk modeling unit. This lines up with some basically contributors to Bloomberg. They said the two storms will likely affect insurers' earnings without having a significant impact on the balance sheets of reinsurance firms. This is going to shield consumers from further large rate increases, which I think remains to be seen. Yeah. We'll discuss some more when we get back. We're back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. Now, every Monday, we have a fantastic guest on the Tom O'Brien Show. This is going to be Steve Rhodes. Steve Rhodes is the author of the Mastering Probability newsletter. He also hosts the Trader's Edge on at 11 a.m. Eastern Time right here on TFNN. Again, check this out. As I said last week, I'm going to say it again. It is just the footnotes of what you need. It goes in depth. You're getting briefed, right? And this is what's so fantastic about it. It is so hard to collate all of the information that is going on in the market. I mean, look at how on fire it is right now, you know? You have to do that if you're going to be a pretty attentive trader with every indice, right? You need to understand these kind of different technicals that are going on, and that can just be extraordinarily overwhelming, and that's where something like Mastering Probability comes in. This is a fantastic newsletter. Again, I want to say, if you've never subscribed to it, you get a 30-day money-back guarantee on all first-time subscriptions. If for whatever reason it doesn't work for you, but I'm going to bet that it is. Steve, how are you doing?
Doing great. Hey, great to be back on the air.
Definitely.
Kind of a sense of getting back to a little bit of normal.
Sure.
I know where I'm at on the East Coast. Not that we really were impacted directly by the hurricane. It was all the tornadoes.
Yes.
Which was really wild because, the not necessarily a cool thing, but the great thing about a hurricane is you can plan.
Yes.
And DeSantis has done a great job in managing the hurricanes and getting things as best as he can, pre-positioned so that once the storm passes, we can try to get back up and running. It takes time, obviously. But really the great thing about it was, I think we lucked out. I don't know what the total death toll is.
Yeah.
I think it's in the 20s or something like that. One is too many out there.
Absolutely.
But it's certainly you don't know when a earthquake is going to take place, right, and you don't know when a tornado is necessarily going to take place. I was watching, luckily the news stayed up here, and many of the tornadoes were about 10 miles to my west or about 10 miles to the north out there. But there was one moment in time, when I say a moment, I'm talking about within 60 seconds, where there were 6 tornadoes on the ground in this area. And that was not all the tornadoes, just in this, let's say 20 square miles around this level out there. Tornado, you can't run from it. Hopefully you're outside and you can see it, and then you try to find cover. Obviously all of our hearts go out to everybody that's impacted by these storms out there. But, it does slowly get back up and running, which helps the psychology of it all. I've been dealing with these storms for 41 years. And I still stay here, and look, I'm on the water. So sure. I know I'm subject to, and if a cat, look, we get out of Dodge. If there's going to be a direct hit, I don't really care what category it is, even though I've got a whole home generator. That's for afterwards.
Yes.
But during the storm, you just, and how that storm cut across the state, right? Just drove right up I-4. So it seemed like, right? From Tampa into Daytona.
I had friends in Orlando who were entirely flooded out from this. And that's, again, on the other side of the state.
Yeah.
It's certainly unfortunate. Well, I'm glad you made it out right, and I know a lot of our Tigers were okay, even though they lost some power. So it's very good to hear. So
yeah. But good to be back, because obviously it gets all of us kind of back into getting back to normal, so to speak. You mentioned the newsletter and just all the correlations that we need to try to take a look at. We can't just be myopic and take a look at one thing. And so kind of a good lead-in to what I want to discuss with you today. And really today's discussion was generated from a question that came in this morning for the Trader's Edge show. And that question was basically saying, how can these markets move higher with all the uncertainty that's going on over in the Middle East? We all know that Israel's going to make some type of take some type of action. I think in the news today, I'm seeing that the U.S. is sending over we're going to have boots on the ground there. Not that we don't already, I suppose.
Yes.
But more boots on the ground there. The situation is escalating. And so the question, and it's a very valid question, with these markets moving higher, is how can that be? With so much uncertainty, how is that possible? So I thought we would take a quick peek at that. And then before we go, I want to be able to share with listeners a trade right now that they could consider. And I'll go through that. So let's begin. I like to say, how do you know where you're going if you don't know where you've come from out there? And so that's what we'll apply to today's chart. So let's start with World War I and how the Dow traded. So I've got the Dow data that goes back to 1896. And World War I began on July 28, 1914. 4.5 months later, and so if you take a look on the left-hand side of the chart, I've got noted, here's a monthly chart that we're taking a look at, so I can get a little bit more data and a better feel for the bigger picture. So we can see when World War I began, we can see that gap to the downside. Now, the U.S. stock market was closed for 4.5 months. That's always a possibility if World War III were to start, so just something for people to consider. I'm not saying that's going to happen, but it did happen in the past. If it happened in the past, it most certainly can happen again. Now, when the U.S. stock market did open, it rallied. You can see here it opens on December 12th. That was the bottom, and then it rallies right until it creates this little TD9 count top. That's one of the patterns that I teach subscribers. The market takes a pause, it moves lower, resumes higher out here. We've got Congress so what's also important really about this chart, and that I'd like to drive home to folks, is that if we take a look at when the U.S. got involved with World War I, which was on April 6th, 1917, that's when Congress went ahead and declared war on Germany. What we can basically see is that was pretty much the top of the market at that point in time.
Yeah.
And then we move lower. Now, one other pattern that we take a look at is the A to B equals CD pattern. And here this for more than a 1-to-1 A to B equals CD pattern. How I identify when that pattern completes is a bullish or bearish reversal candle would form. In this case here, because the market was moving lower, it was a bullish hammer candle. And that was so that formed a bottom pattern here. And then we can see that on November 11th, maybe about 10 months later, we can see that that's when World War II ended and price moved higher. What was going on here, this was global capital out of Europe coming into the U.S. Somebody can say, well, why did the U.S. rally out there? Because we didn't have any boots on the ground here. Global capital or large capital or smart capital knows you don't want to be parked when there's a war going on inside your country. And the reason is because those wars have got to be funded. They're going to be funded by either increased taxes, by increased inflation. Not that that funds a war out there, but you're going to experience just simply through shortages.
Yeah.
And so capital doesn't want to be there. And so where was it going to shift to? Well, at that stage in time, it certainly was inside the U.S. So we saw that was going on inside of World War I. So the summary really of all that stuff right now, first, patterns work, because we took a look at TD9 counts, we took a look at A to B equals CD patterns out here. But once the U.S. enters a war, that's when we typically see a move to the downside out there. In this case here, when we take a look at where World War I Out here, we can see that it formed a Rhodes momentum indicator and a wave 7 or letter G bottom, and that then finally began the rally. So again, another sign that we want to be paying attention to the patterns that are out there. With regard to World War II and how the Dow traded, I see, geez, I've gone a little bit too long here.
Steve, keep going because we can keep you on to the next segment. This is fascinating stuff.
Okay, cool.
Yeah.
So when we come back from this break here, we're going to take a look at World War II. We're going to take a look at when Germany invaded Poland on Friday, September 1st, 1939. That's what all historians consider to be the beginning of World War II. And we come back here, if you take a look at World War II here, look at what happened in the U.S. A very nice bottom.
Folks, stay right there. We'll be right back with Steve Rhodes.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup. I am joined by Steve Rhodes. Taking a look, Steve Rhodes is the author of Mastering Probability newsletter. He's also the host of the Trader's Edge. That is on 11 a.m. Eastern time right here on TFNN. Again, check this out. We have 3 options for you regarding mastering probability. Loading right now. We have $149 for 1 month, $695 for 6 months. That is a 22.26% discount on it. And then for the 1 year, we have $11.95. That's going to save you $593. That is a 33.17% discount. I want to say, for all first-time subscribers, you get a 30-day money-back guarantee. If for whatever reason it doesn't work out, we're betting that it is going to. Before we went to the break, Steve was discussing essentially why the U.S. is doing so well right now, even though there's so much, at least the market, there's so much uncertainty in the world. So we're taking a look back through that in a historical context. We're looking about, at least with the world wars, and how the market was responding during those times. Steve, please take it away.
Yeah, and again, that question came about this morning by a viewer, listener, about why is the S&P moving so much higher when we know that there's going to be some continued Middle East tension out there. Here we're taking a look at the beginning of World War II. Now, on September the 1st, 1939, that's when Germany invaded Poland. Take a look at that bar. This is it was a very wide ranging bar with regard to distance that price traveled. But look how price pushed down. It tested a swing point. That was actually a buy the D point pattern. I'll show that here in a few moments out here. But price pushes down and almost closes at the high of the day. That is a very bullish signal. Now, that was on September 1st. We know that the first Monday in September, that was a Friday. The first Monday in September is Labor Day, and then the very next day is when the market opens. So keep that in perspective out there. Here, by the way, is that A to B equals CD pattern to the downside. So we already had a buy the D point pattern that had formed this is a daily chart, by the way, had formed the prior week out there. And then simply that level was tested. It was rejected. Again, just a reminder that the patterns that we use, that we teach here at TFNN, they really do work, even during highly emotional time periods out there. And then we get the on Sunday, September 3rd, France and the British Commonwealth, they declare war on Germany. So it's just really heating up out there. And then the following day is when the U.S. stock market reopens. And when it reopens, it closes higher by 9.5%. That's a pretty big move out here. What are we at in the Dow right now? What would be a 10% move? 4,000 points or so? I mean, so just kind of keeping things in perspective out there. Again, this was another sign of global capital exiting Europe and moving here to the U.S. Now, what's nice about when I say patterns repeat, or they patterns work even in emotional time periods, the market topped on September 12th, 1939 with a TD9 count top. And that was a top that lasted for quite some time out there. So again, these patterns work. And so what I just want to say in summary, here I'm pointing out when, and everybody knows that we entered World War II, the U.S. that is, on December 7, 1941, Pearl Harbor. And so I've got that identified. This is a weekly time frame chart. And so just like in World War II, when the U.S. entered the war, physically entered the war, there in World War I, Congress had declared war, bringing Article 5 into being out here. And here on December 7th, it was the next day when Congress went ahead and declared war on Japan out there, and we can see the price continue to move lower. So what I want really the question is, so one possibility is that we may not see a significant top until the U.S. enters World War III. Whether it does or not, that I don't know. But I do know, in going back in this turmoil period of time that we're in, that's something to most certainly pay attention to. If we take a look at global capital flow and what's going on right now, let's go take a look. So here, what I've got, this is the Dow, priced in all of the major currencies. And we're at a new all-time high today, Jacob, priced in U.S. dollars. We're at a new all-time high in euros. We're very close to being a new all-time high in yen. We're at a new all-time high in Aussie dollars and Swedish krona, Great British pounds, Swiss francs out there, Chinese yuan. It's just the yen, which is very close to being at a new all-time high, and a Canadian loonie, where or not. This is a sign. So here, if you take a look at what does that really mean, Stevie? That means if you're sitting over in Europe and your local currency is euros, you're more interested in how the Dow is trading in your currency than it is in somebody else's. But like you said, we've got to correlate things. We can't be myopic and only take a look at what's going on inside the U.S. Now, you can, But my suggestion is that you don't, because this is a global market that we're in with regard to stock markets, just with regard to everything. So here we can see capital that's flowing in from all the major currencies out there. What happens if we go take, like, I would call it some of the junior currencies. Now here I've moved from the Dow, Jacob, into the S&P 500. Actually, that wasn't the chart I wanted to take. Well, this is the S&P, and it really shows us the same thing. But what I wanted to do with regard to the S&P is let's go take a look at how the S&P is trading in all of the major countries in the Middle East. So whether we're taking a look at what's going on in Kuwait, in Egypt, in Syria, in Iraq, in Israel, in Saudi Arabia, you can see right now today we are at new all-time highs. This, again, is a signal that global capital is moving into the U.S. So this is now, if we take a look at gold as an example, we're not at new all-time highs today in terms of U.S. dollars, but we are in terms of euros, we are in terms of yen, we are in terms of krona, we are in terms of loonie, in pounds, Swiss franc, Chinese yuan, and Aussie dollars, all of them. So if somebody is thinking that, hey, the U.S. dollar, maybe it's getting ready to pull back, I say you got to think twice, because these are all buyers over here in all these countries, inside those currency pairs out there. So it's just global capital flows. It's one of the aspects, one of the things that I do to correlate things inside of Mastering Probability. Subscribers get access to charts like this when they're pertinent. Right now, they're very pertinent. I think there's another pertinent chart. If it's okay, do you have any questions about what I've shared so far? Anything that
that's
I need
fascinating.
to re-review?
Yeah. No, please keep going. This is so interesting.
Perfect. So I want to leave today with a trade opportunity that people can take a look at. And so if you give me a moment here, we're going to change screens. What we're going to do, we're going to go over to an 8-panel screen out here. It really starts with a daily time frame and then all the time periods below. When we form a daily top or bottom, in this case here, we're looking at the 30-year Treasury, and the 30-year Treasury actually on Friday formed a buy the D point pattern. People may remember when we took a look at World War I, we saw World War II, we saw an A to B equals CD pattern that was confirmed by a bullish reversal candle. Well, on Friday, it was a bullish hammer candle. That low was tested today, and so far that has been tested and rejected. That's a bullish signal. A close below 119.23 would say that sell that by the D point pattern failed. When we get daily bottom signals, and we're also going to form a TD9 count bottom today, what we look for on the intraday charts are bottom patterns out here. And we've got them for all these time frames, 5-hour, 4-hour, 2-hour, 1 hour, 30-minute chart, 15-minute chart, and 10-minute chart. And on the 15-minute chart, it formed a TD9 count top this morning. And that pullback was very mild. And we took that out just as you and I had come on the air here. It looks to me like the 30-year Treasury is at least going to have a counter trend move. And I would suggest that 30-year Treasury can get up to 122 or so.
Steve.
So that's my trade for folks out there to consider.
Thank you so much. That was fantastic. Guys, you don't get this anywhere else. Steve, thank you so much for coming on. We'll see you tomorrow at 11 a.m.
You bet, Jacob. Take care. Have a great day.
Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. We were just joined by Steve Rhodes. If you missed that whole segment, no need to worry. A little bit after the end of programming today, we're going to have that clip up for you on our YouTube channel, Tiger Financial News Network. Make sure to go visit us there, check that video out, give us a like, give us a subscribe. It helps us out immensely. And yeah, I thought that was a fantastic interview. You know, that capital flight into the US, even if things are relatively uncertain as they are here. I mean, you have, you know, cash carry in some perspectives saying, hey, listen, like, you know, you're still going to see some rate cuts, but it might not be as robust as people had initially assumed. You know, we still had some pretty strong inflation numbers that came out recently. So it's sticking around, you know, at least from that perspective, right? You're really juggling right now persistent, I would say really increasing inflation as opposed to kind of a persistent higher than the 2% target. That's a little bit of a better position to be in. And then obviously, you know, you're juggling jobs and stuff like that. But certainly the U.S. is, you know, poised in the best position it could be compared to other large powers. And again, we were speaking about earlier in the show as well, is the potential for Germany to go into recession. You're obviously having some issues in the UK as well. And so that just further bolsters the position of U.S. markets. Of course, you are getting up to these massive all-time highs, at least in the SPY, on some contracting volume. We'll see what kind of happens going forward. But no doubt what Steve Rhodes brought up was super fascinating, I thought. So again, go ahead and check that out afterwards. That's going to be on our YouTube channel, Tiger Financial News Network. Helps us out immensely. All right, let's talk a little bit about what is at least domestically driving everything going on here. And that's going to be tech in a major way. You have NVIDIA up 3% today, trading at 138.88, 3.4 trillion market cap. Wow. Okay, so first things first, that's really interesting with what NVIDIA is doing. Well, first, Wang said that Blackwell demand is massive. Additionally, you have CoreWeave. Okay, this is an NVIDIA-backed CoreWeave. This gets 650 million credit line from Wall Street banks. This is a NVIDIA-backed artificial intelligence startup. It rents out chips to other companies. This is a pretty fascinating concept, right? It's announced Friday that it has a new $650 million credit line to expand its business and data center portfolio. The cloud infrastructure company said that it's raised $12.7 billion from equity and debt investors in the past 18 months, including a $1.1 billion round in May at a $19 billion valuation. At the end of 2024, CoreWeave plans to have 28 data centers across the U.S. and abroad, including locations in Texas, Chicago, Las Vegas, London. And it plans to build another 10 centers in 2025. Supplied Microsoft, French AI startup Mistral with graphics processing units. Let's see. CoreWeave reportedly had a $2 billion revenue under contract lined up for 2024. This is a super accessible way for people, you know, essentially rent out AI space, whether that's going to be for training. You get into a new realm when we're now talking about inference, right? Because we're going to start entering this phase now, at least in the AI realm, where it's not going to necessarily be about training and building these all out. This is where NVIDIA has done this exceptionally well. Of course, their GPU is very well designed for parallel processing. And, you know, I do find it funny in a sense, right? Because I've been following Cerebras a little bit. Cerebras is making something called WSEs, okay? So wafer scale engines. You know, a lot of the issues you're starting to run into with some of these chips, you know, you can keep making them smaller. You need to add more transistors, all this kind of stuff. When you're communicating across these different chips, it can be highly inefficient. It can suck up a bunch of energy. One of the things I've been doing with the transistors, at least, has been stacking them, which isn't necessarily optimized, or optimal, excuse me. But regardless, NVIDIA, you know, had what they needed. It was initially made for, of course, graphics, right? You need to process these things in parallel in order to get stuff on your screen. But people found out that at least for machine deep learning, you know, it works out pretty well for that because you have all these different parameters that need to be running at the same exact time. And what you're gonna initially or eventually get into is now inference work, right? So the utilization of these large AI models in order to accurately, you know, predict certain models or whatever, you know, and that's where I think Cerebras is a bit interesting. Now, I would say the problem I have with Cerebras is that all of the information of what it can do comes from them. There are some use cases, right, with, I believe AstraZeneca is using them. You have a large company out in Dubai that is using them. That gets a little bit spooky because there's not a lot of people using it, and we don't really know how much it works. They pushed the IPO back a little bit. You know, okay, yeah, so AstraZeneca, GlaxoSmithKline, Mayo Clinic, these will be really good for things like that. It's not necessarily a GPU, it's not a CPU either. It does basically floating point and tensor processing, which is necessary. The tensor is a little bit better for stuff, you know, like I would say drug manufacturing, even when we get into the realm of like nuclear, right, which is, you know, we're totally going headstrong into that. We can talk about that a little bit going forward. This is the energy department, actually, but we'll discuss that. Regardless, I think the WSE is probably a little bit better engineered for stuff like that if it does what it says it does, right? You have G42, that's its massive client. There are some issues with G42 that kind of ties into them pushing this IPO back under the kind of the auspices, excuse me, Abu Dhabi, not Dubai, but that they might be giving some of this technology to China, which is a big no-no if you're an American company. And so we'll see what happens. It seems that Huang said that their moat is large enough, even within the inference realm, that companies like this can't necessarily just enter and shake everything up in a quick fashion, right? So, at least from the NVIDIA perspective, they seem like they're poised very well. The Blackwell is kind of following similar, how can I say, like an attempt to make larger wafers, right? So the GPUs have to be in their own little, you know, it's modular, right? That has some benefit to it. But you also get what we were talking about with communication inefficiencies. That uses a bunch of power. You start getting bottlenecking issues. The WSE avoids that by having everything on a big single wafer. But with Blackwell, which apparently there's massive demand for, they're using, you know, these separate dies and kind of, you know, melding them together, which in some capacity, you know, acts more like a WSE than just your, you know, what we have now with Hopper. So kind of interesting, at least for the guys out there that were talking about Cerebras, and I was emailing some of you because it's very interesting, right? Just, you know, we don't even have the IPO yet, right? So we can't look at what's going on. We don't really know their financials in a major way. We don't really know if what they're claiming operates the same way that it, you know, would in the real world. You know, if these are all lab tests or, you know, projections and stuff like that based on, you know, essentially the hardware, that's a lot different than actually, you know, plugging it into a server and having it do inference work. Regardless, you know, we'll see what happens with that. I think another thing with Cerebras that's a little bit worrying is you're not getting any large banks backing it, right? The same way that you're getting this with NVIDIA, especially like with things like CoreWeave. That in itself is spooky because especially people like Goldman Sachs or entities like Goldman Sachs jump on stuff like this. if it's as disruptive as they say it is. We'll see what happens. Folks, stay right there. We'll be right back for a short segment.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show, of course. Before we went to the break, we were just having some musing on NVIDIA and potential new entrants like Cerebras. So we'll talk a little bit more about that, just give you like some exact numbers with Cerebras, which is very interesting. It has 900,000 AI optimized cores, and this is the whack thing. 4 trillion transistors, which I don't understand how they're able to fit all that on there. Capable of handling AI models with up to 24 trillion parameters. It offers peak AI performance at 125 petaflops. I mean, that's extremely efficient. And again, the large chip, everything communicating on this chip, it has a certain kind of lattice structure in it as well that allows everything to communicate. It has SRAM, I think of about like 44 gigabytes, if I remember correctly, which is pretty immense. And we'll see what happens with it. But it does seem like they are getting investigated, at least due to their largest buyer, which is that G42 company. Little bit spooky. At least it's not out and people are invested in it, right? Because if that comes out afterwards, you run into some major problems. So we'll see what happens regarding that. I think it's just kind of too early to tell. Another thing that's interesting with Cerebras is about, one of the big things with chips is, and this is what we were talking about with Intel and some of their issues with creating, some of these next gen chips, is that their yields aren't good. So it blows my mind that they say 1.5% of the wafer is redundant. Okay, so that would suggest that they have, like a yield of 98.5%, maybe a little bit higher just for extra redundancy. But that's exceptionally accurate for something that large. And to be able to do that on a large scale, which they have not produced these on massive scales, that would be game changing. I think, again, at the heart of all of this is that still, you have TSMC doing all this kind of stuff, which is fantastic, producing it. Folks, thank you so much for joining me today. Again, if you missed my interview with Steve Rhodes, go onto our YouTube afterwards, Tiger Financial News Network. Make sure to like that video. Give us a subscribe. It helps us out immensely. I hope you all have a great rest of your day.